Hello and welcome everybody to yet another video that I've put together just for you. I hope everyone is well. Today I'll be talking about a particular stock which you would have probably seen from the title of the video that it's CoreWeave. But we'll talk about what I think of this stock. I've been asked this particular question: Iman, do you think it's going to go up? Do you think it's going to go down, or is it just hype? I'll give you my brutally honest answer on this. And at the end of the day, we're not here to chase hype. We're not here for the FOMO factor. We have to keep ourselves safe. Okay. So over the last 24 hours, we can see that the stock market performed relatively well. We can see that one of my favorite stocks, Google, actually went up by 1.2%. Meta, it's always going up every month from the last couple of months. And I keep increasing my positions in Meta. This is a forever stock, as I like to call it. And so is Google. I like to add to these positions very, very often. Now, let's talk about CoreWeave, our friend. And a bit of a summary right here for those of you who have not heard about CoreWeave before. CoreWeave is a US-based AI cloud provider built specifically for GPU-intensive workloads like AI training and inference. What makes it different? There are a couple of items that makes it really stand out. AI-first infrastructure, fast GPU access. Now, this is the key point here. Among the first to deploy NVIDIA's latest chips at massive scale. It's got big partnerships happening. It's a multi-billion-dollar company, obviously, with deals with OpenAI, Microsoft, and many other massive companies. Rapid growth, agility, and support. And what we can see here as a summary, CoreWeave is now positioning itself as a true AI hyperscaler. So this is a very good company that keeps innovating, keeps rebranding itself into being this powerhouse of GPU-intensive workloads and assisting with the next phase of AI, which is going to go into overdrive, in my opinion, in the next couple of years. However, let's talk about the numbers. Let's talk about this particular stock. Is it a good opportunity to buy? Is it not? What my thoughts are. Let's go. So what we can see is that CoreWeave dropped by over 50%, in a space of about a year. And this is actually this is a bit of a red flag for me, to be very honest with you. Why has it dropped so much? Typically, if a stock has very solid numbers, if it's got very solid foundations, if I use the different tools which I'm about to share with you, and I see that the stock has got massive momentum of cash flow and income behind it, then I basically salivate at this opportunity. I'll go in and buy everything as much as I can with the money I have. However, this is a bit of a worry. However, we can talk about the reasons why. Let's go into TipRanks, my first tool that I'm using here. TipRanks has given this a moderate buy rating, with an upside of 38.75%. Some of you will be super excited to see these numbers. However, I have seen numbers higher than this and then see the actual stock crash and never recover. Many different examples I can provide you, but for the sake of this video and keeping it short, let's move forward and talk about the other screens. And we've got here Seeking Alpha, one of my favorite tools to see how the numbers are stacking. One of my main points of contention with this particular stock, there's not much information about it in Seeking Alpha. I need a stock to have a very solid set of numbers I can work against, or work with, I should say. So currently, I cannot see any PE ratio. I cannot see a forward. I cannot see a trailing PE ratio, and there's no, price to earnings growth at all. No data whatsoever. So this is a bit of a worry, and I like to see at least two of these being a buy hold. Only one of them is a buy hold by Seeking Alpha. If I was to look at the ratings for Wall Street, and what we can see here is that Wall Street has given this a 39.36% upside. So this is an example of a, you can call it a hype stock. It's got a lot of hype behind it. It's got a lot of people talking about it. But I do see plenty of risks with this particular stock, and the next screens will illustrate my point. So let's go to here. One of my favorite tools, Stock Unlock. If you guys have not got access to this tool, please look at the link in my description. Right, so with Stock Unlock, let's talk about the analyst forecast. Again, same as Seeking Alpha, the analysts have given this an average of 39% upside. But going to insights, we cannot see enough information. The profitability is, gross margin is okay. However, is currently unprofitable, and the operating cash flow is very bad, as we can see here. Going up to this section, it says CoreWeave has a negative cash flow of minus 4 billion, give or take, which means it's currently losing money. Also, it has a current cash runway of 3.39. The cash runway is the amount of time the business has at its current burn rate before it will need to take on debt or dilute shareholders to raise more money. So these numbers, it's not looking good from my perspective. Some people like this sort of risk. I'm not here to risk my money. I'm not here to lose on something because I feel like everyone's talking about it. So this reminds me of, again, many stocks that I've dealt with in the past. The only times I lost money in the stock market is when I followed everyone's Fomo. I felt like I was missing out on an opportunity and I lost a lot of money on that. That ain't happening ever again. So let's talk about the financials, and this is one reason why I'm staying away from this particular stock until the numbers look a lot more solid. The total assets currently sitting at 26.24 billion. If I was to add the total liabilities with the total debt, the number will be a lot higher than the 26 billion here. So this company is not making money. You can say this company is generating a lot of customers. It's dealing with some big companies like Microsoft. There are big contracts involved. However, show me the money, as we say. Now, before we say goodbye, I just wanted to give you a bit of a summary based on all the research I've done, based on all the points I've covered in this video, and points I have not covered, just to save you guys time and effort. The technical snapshot of CoreWeave, the current trend, it has dropped by over 50%, as I mentioned before. The chart shows a clear descending channel pattern. So again, another bearish momentum signal. Volume during the sell-off remains high, confirming strong selling pressure with little sign of buyer support. This is big. There are not that many buyers coming through and purchasing this particular stock. So I'm guessing the stock is going to continue going down before the numbers start looking very attractive. The technical indicators, RSI, Relative Strength Index, sits near 38, approaching oversold territory, but not yet signaling a reversal. This is important. There's no bullish divergence forming on RSI or volume. So my recommendations: do not enter at the current levels, because the safest approach is to wait for a potential base to form or retest of previous support. That's exactly what I was thinking, and all the research I've done has actually come up to the summary. So my recommendation is to reevaluate in 4 to 6 weeks' time, or when RSI hits extreme oversold levels below 30. This is not yet a buy the dip opportunity. The trend is your friend, and right now the trend is decisively bearish. Exactly right. So my recommendations, guys, is don't enter into this trend just yet. Chances are this is a bit of an overhyped stock. As of this moment, I'll just wait it out and see what happens. I do see a lot of potential in this stock. It reminds me of Palantir, how Palantir was at the very early days just trying to lock in contracts. And we did start seeing some big numbers come in, and that's when I entered Palantir, and I sold it for over 400%, and in some cases, even 700 or 800% ROI. So guys, this has been the verdict on my CoreWeave analysis. Please let me know your feedback or questions. I look forward to hearing them. And as always, stay safe out there in the markets. Take care. Talk soon.